Alright, so maybe your wife's boyfriend told you about Booz Allen Hamilton, and now you're trying to do your homework and research to figure out if it's actually a good company or not, a stock that you want to invest into. Well, in this video, we're going to be doing a deep dive to figure out if it's a dividend compounder with cheese, like is it delicious, or is it going to be disgusting, or maybe it's just decent. Well, we're going to figure all of that out together. Let's get into it. Booz Allen Hamilton is a tech-focused consulting firm that generates about 98% of its revenue from its government clients. And as you can see by this Wall Street Journal article title, Doge is coming for firms just like it. So it may or may not be a good time to invest into it, but where I see a lot of fear and uncertainty, I see opportunity. And the article goes on to say that Booz Allen generates 98% of its roughly $11 billion in annual revenue from contracts in which the end client is the U.S. government. It has told investors that it sees the U.S. government as the world's largest consumer of management, consulting, and technology services. However, since the election back in November of 2024, its stock is now down by 30%. And if you look at its peers, it's almost the exact same story. Everyone is going off on this uncertainty, fear, sell-off. When we think about Booz Allen Hamilton, ticker symbol BAH, no, not basic allowance for housing, this isn't some company that just started up in the past decade or so. Their history is pretty darn rich. It was founded in 1914 in Chicago as one of the first management consulting firms, and during the 1940s, they played a pivotal role in World War II by helping out the U.S. military in improving their logistics and operations. Because sometimes, when you have a room full of generals and top brass, they can become tone deaf. They don't really understand what the Joe or the privates need on the front lines. So it's always helpful to hear an outsider's opinion or suggestion in case a bunch of yes men conjure up the dumbest missions because they just want to suck up and brown nose to the general so they can get a promotion 6 months down the road. You hate to see it. Anyways, after their consulting help was seen as worthy, Booz Allen found a niche with military contracts and cementing their reputation as a trusted advisor to Uncle Sam. Even today, many years later, they still do a lot of projects for the Department of Defense. So let's go ahead and talk about their business model. So when it comes to the United States government and the federal employees, I'm not going to lie to you. Some of them are amazing, top performers, good people. And then there are those in the government that are just ass backwards. They don't know what the hell they're doing, and they're just there, and their ass has been in a seat for the past 20, 30 years, and they're just useless for the most part. And I'm not trying to be mean, but it is what it is. And so consequently, our government will have inefficiencies, or they'll even have some websites that need to be updated. However, the butt in the seat, the GS position, will have no idea how to implement what they actually need. So what happens is the US government hires Booz Allen, usually in a firm fixed price contract, to get it done, whatever it is they need. Speaking of which, in the consulting world, FFP contracts tend to be more predictable and stable. However, as a guy that has way too many friends that work for Booz Allen, I can tell you that they're not doing the traditional mode of consulting like Bain, McKinsey, or even Deloitte would do. Instead, most of Booz Allen's work is staff augmentation. And before I go any further, this slide that you're seeing right now is their newest investor relations presentation where they give their guidance and their bullish sentiment for the fiscal year of 2025. And for the past decade or so, yes, they view themselves, I guess their pronoun was a consulting firm. However, as of 2025, they're trying to label themselves as a technology company, but I think that's lip service. At the end of the day, they are still an advisory and consulting firm in a traditional definition. However, within consulting, they do staff augmentation work, meaning most of the Booz Allen consultants, they're going to be thrown into work sites and are expected to work as if they are regular employees of those sites, such as the Department of Labor or Department of Defense. This is an employee method that was stemmed from President Clinton's policies. Clinton put this into place so that the government doesn't need to hire and fire government workers as technology evolves and upgrades. Instead, they can just firms rely on consultants, such as from Booz Allen, that are easily replaceable depending on the project or contract, or Booz Allen can be the subject matter experts that can just come in and do whatever the government needs and then they can leave as soon as the contract is over. So in short, Booz Allen is a consulting agency that fills in the gaps of the federal government agencies, and they work those jobs as Booz Allen employees instead of as government folks. And a bulk of their work is AI implementation and digital transformation. So I guess that's why they're trying to label themselves as a tech company, and they're trying to disassociate themselves as a traditional consulting firm, but I don't think it's working. Anyways, so their line of work includes updating websites and databases so that it doesn't look like straight garbage from 1999. And when we take a look at their fiscal year 2024 revenue breakdown, 47% through the military agencies and the government, 34% in the civil federal agencies, 17% from like the CIA, FBI, and then 2% were from the commercial clients. So as you can see, 98% of their money is generated from the US government, and that's why it is going on a massive sell-off despite having really shiny, bright, and beautiful financials and fundamentals that we're going to be looking at here in a little bit. And it is a consulting firm, so you do got to keep in mind they have a lot of human capital, 35,000 employees, but they don't necessarily have a lot of capex and overhead costs, besides like paying for the office lease. And I suppose there's 17 manufacturing and R&D centers that are located all throughout the United States, usually near a military installation. Colorado Springs would be the Air Force Academy. Lorton, Virginia would be near the Pentagon. El Segundo would be near their Los Angeles Air Force Base. I think it belongs to the Space Force now, but etc., etc. Case in point, when you look at this bullet point right here, invested $3 billion in advanced technology and R&D. So that is what differentiates them from other consulting firms, that they are trying to establish themselves as a new tech company like Google or Microsoft or even Palantir. Speaking of which, when it comes to Palantir, I guarantee you Booz Allen is trying to copy their business model and turn into Palantir. But the difference is Palantir sells a software as a service to do data analytics for the cyber community, for the military, whereas for Booz Allen, they're sending actual consultants that are AI or IT specialists to go help out the federal government. So it's an entirely different situation. So for the most part, a bulk of the work is done through staff augmentation work. However, there are actual management consultants that work within Booz Allen, but I would argue that's a minority. And something else that I want to mention is their contracts and their projects that Booz Allen is working with. Take a look at this right here. 70% of their employees hold a secret clearance because they're working on very top secret military endeavors, which I think is pretty interesting and pretty cool. So I think when we talk about an economic moat, I think that is one. 70% of their employees are working on classified projects for the federal government. They're basically government employees. And while we're on the topic of economic moats, in a sense, they also have one because they developed working relationships and partnerships with a lot of the government agencies. But I do want to say that Booz Allen is not the only company that does what they do, which is federal and government consulting. We also have competition from Deloitte GPS and Accenture Federal Services and a little bit of IBM. Yes, IBM, the antique technology company, just has their hands in a little bit of everything. And by the way, I mentioned it a few times in my videos, but I'm from the Northern Virginia area. And odds are, whenever I'm stuck in traffic when I do choose to drive in a car, because for the most part, I voluntarily choose to pedal on a bicycle to get from point A to point B. But if I choose to drive in a car and I'm stuck in traffic on the highway, if I look left or right, both of the drivers will either work for the government, the military, or one of these defense contractor companies such as Booz Allen, Raytheon, or even Lockheed Martin. It's just the way it is in life in Nova. So despite the bearish sentiment and fear and doom surrounding this company, Booz Allen from Wall Street, look at how they have reiterated their 2025 forecast. By the way, their 2024 numbers, they absolutely crushed. However, for this fiscal year, the next, 9 more months to go, they're expecting their top top line or revenue to grow in the ballpark of 12.5%. Their EBITDA, their earnings before interest, taxes, depreciation, amortization, they're expecting it to grow by 1.3 million, their EBITDA margin to be around 11%, and their adjusted diluted EPS to be around like $6.37, and their free cash flow to be around $900 million. This is absolutely bonker numbers. However, when it comes to Booz Allen Hamilton, it's not all sunshine and rainbows because it is going on a massive sell-off based on speculation and the future being priced in, where their contracts are going to be void or canceled. And so number one, what is the argument against this company? Doge is going to make Booz Allen Hamilton cry, get on their knees and to beg for more federal government contracts. And then number two, they are currently operating their business model in a presidential administration that's not exactly friendly towards government workers. As a matter of fact, there's thousands of probationary and temporary employees of the federal government that are being fired left and right as I make this video right now. So the suggestion and the forecast is that for Booz Allen Hamilton, they're going to have 4 years of pain ahead as all of their contracts are pulled and the rug is just swept, and their wife's boyfriend taking your kids to Disney World. It's going to be pain for this company. However, in light of that, what I do want to show you is this. So in that exact same Wall Street Journal article, check this out from the CEO. Booz Allen has been through presidential transitions before and will weather the reviews of federal contracts, Rosinski said. The company's work also aligns with the Trump administration's priorities, he said. We recognize that in the short term, there could be some disruption in the market. However, in the long term, we are really well aligned, he said, because, check this out, if the government wants to operate with fewer people, then it's going to need to operate with more technology and technology that works, and our stuff works. So the CEO of Booz Allen Hamilton is saying, hey, if you're going to fire a bunch of workers for the federal government, you're going to still need those agencies to be operating and up and running, correct? That's where our consultants come into play so that we can integrate and implement AI into your servers, your databases, your websites, whatever it is. We are going to make the dream come into a reality. And so in the eyes and the words of the CEO of Booz Allen, he's not scared. He's not fearful. He's actually bullish. He's willing to work with the Trump administration to get this work done. So that's the argument against the company, their economic moat, their business model. Now let's go ahead and take a look at some numbers and financials and metrics to figure out if the company is good on paper and if it's undervalued or not. Alright, there's my stupid fat head. Hey guys, alright, now let's look at the numbers. The first up is going to be their revenue. This is what investors refer to as the top line. For almost 99% of the businesses that you want to invest into, you want to see the top line be growing consistently and predictably year over year. Why? Because if the revenue is not growing in a nice positive trend, then the company, for the most part, is stale. They're stagnant. Or in a worst case scenario, they're even decreasing or losing market share to the competition, or their business model, service, or product is losing its relevancy. So we do want to see the revenue be growing. And in the case of Booz Allen Hamilton, what we're going to do right now, these numbers right here, we're going to replace all of them. In the past 12 months, Booz Allen Hamilton posted $11.78 billion of revenue. Pretty wild. And check this out. Year over year, that's an increase of 14.07%. That is amazing. That is double-digit growth. So is this company stale? Are they flat? Absolutely not. They are growing at a very aggressive rate. And when we think about their earnings per share, this is really important because we're trying to figure out the profitability and the net income of this company. When you think about the net income, that's what investors refer to as the bottom line. When you take into consideration all of the expenses, the operational costs, the overhead costs, the utility bills, the insurance bills, after all of that, what is your take home? What do you put into your pocket as profit? And so the EPS is really important. Also because it helps evaluate and determine the PE ratio, the net income. And in the case of Booz Allen Hamilton, their EPS right now is $6.72, which is an increase. Check this out. This is absolutely bizarre. It's an increase of 116% year over year. Does this sound like a pretty good company so far? I think so. I think it's a dividend compounder with cheese. I'm getting ahead of myself. By the way, I am not invested into this company. Okay, so if you think I'm being biased here, well, I don't have them in my portfolio. When I see good or sexy, dude, I recognize and I give props where it's due. So far, it's looking good. But what about the debt? Because if they are drowning in loans and they're leveraged beyond belief, then this is a company that I might not want to touch. So in the case of Booz Allen, right now their total debt, this is really funny. Guess how much total debt they have on hand according to their balance sheet? They have $3.598 billion of debt. And in contrast, when we compare it to their EBITDA, because we're going to do the debt to EBITDA ratio to figure out if their debt is manageable or not, right now that is $1.4 billion. So when we break it down into a ratio format, their debt to EBITDA is going to be 2.56. It's way below the golden standard of a 3, meaning it would take Booz Allen 2.5 years, if all else being equal, their earnings not changing, 2.5 years of their earnings to pay off all of the debt that they have on hand, which to me sounds really manageable and not bad at all. Next, we're going to be checking out their operating margin. For every dollar that they make, what is their profits through their operations? As of right now, it is sitting at 11.54%. But check this out. This is where it's going to get absolutely weird. Year over year, that's an increase of 68.7%. That means they're being a lot more efficient and optimized in their operations of how they're dealing with their consultants, meaning they're probably booking their clients for everything and anything that they do or eat. Every meal, yeah, let's charge that to the clients. Our hotel rooms, yeah, we're going to charge the clients. Our travel fees, yeah, we're charging the clients. And that's why when I think about the overhead costs in relation to a consulting firm, sweet deal. Okay, so far we understand that their top line looks like an amazing picture. Their bottom line looks pretty darn amazing. Their debt, absolutely manageable. Their operating margin, chef's kiss. But what about the free cash flow? Is this company heavy in cash? Are they turning a profit? I mean, of course they are because the EPS is positive, but if a company is not generating positive free cash flow, run away. I am telling you, run away. That is a dumpster fire in disguise. No matter how sexy or cute you think they are, block, sign off, delete, uninstall the app. Okay, anyways, their free cash flow per share is going to be $6.53. That's pretty darn good. And check this out. Year over year, that's an increase of 64.5%. That is absolutely diabolical. This is absolutely wild. And by the way, if you're wondering why I'm wearing headphones, it's because I'm listening to classical music right now as I just grind this out. I think it's a pretty cool workflow to be listening to Eric Satie. Is that how you pronounce it? I don't know how to pronounce French words. I'm ignorant. I'm sorry. Listening to Eric Satie while I do a deep dive on a company called Booz Allen Hamilton, how much better can my Wednesday get? I think I'm living the life. Anyways, their shares outstanding situation. What we want to see is a company that is buying back their shares. That way they can artificially and manipulate their earnings per share to be increasing year over year. If a company is diluting the shareholders constantly, then their EPS is going to be suffering. But sometimes the company has to issue more shares because they're running into profitability issues or they need to raise more capital. So a company that issues more shares, bad situation, unless it's a very high aggressive growth company and they need more capital on hand to fund their R&D and their expansion projects. But for the most part, if you have a mature company like Booz Allen and they're diluting the shareholders, not a good situation. Anyways, right now there's currently 128 million shares outstanding, and from the quarter prior, they bought back 1.54% of the shares outstanding, and they've been doing that consistently, at least for the past 5 years. They've been buying back shares quarter over quarter, year over year. So I would argue that's pretty good. And let me just put it right here, quarter over quarter. That way we can understand that they are buying back the shares, and there's not that many shares outstanding. That's pretty small in relation to other companies that have like 500 billion shares outstanding. Booz Allen, only 128 million. Not bad at all. And when we think about their trading multiple, we want to know, is the company on paper? This is what most investors look at. They might not understand anything about the balance sheet, the 10K or the income statement, but everyone magically understands what the PE ratio is. For me, I think it's overrated, overhyped, but it is something to take into consideration. I think for me, in the final equation or formula for whether or not I want to invest into a company, I think the trading multiple makes up like maybe 2% of the decision decision-making process. Anyways, as of right now, their forward trading multiple is going to be a 15.93, which is not bad at all. And something that I do want to call out is historically, their PE ratio is usually around a 26. At least it has been for the past 15 years. So the fact that it's at about a 15.9, it tells me in terms of a valuation and a trading multiple, Booz Allen does seem to be quote-unquote undervalued. And when we think about their past year performance and their range, like what was the highest price ever, what was the lowest price, their 365-day high was, what is this, $190.59. I think right now they're hovering at around $110 a share. The lowest price they've ever been, they hit that actually last week, and that is $101.82. So the lowest price, $101.82. And when we take into consideration their 200-day moving average, we're talking about a technical analysis here. All of this is super speculative, but it is something that is helpful to see if they have a line of support or not, or if they're historically at a good price. Their 200-day moving average right now should be at about $147 a share, which means in relation to their 200-day moving average, they're at a discount by 25%. And something that I do want to call out is during the pandemic sell-off, when this company reached the lowest of the lows on March 13th of 2020, they were 19.7% below their 200-day moving average during the pandemic sell-off, when everything was on a massive discount. So right now, they're deeper into the red than in comparison to the pandemic sell-off. And as of right now, Booz Allen Hamilton does seem to have a line of support at around the $100 range. Meaning if the stock price does hit like $101 a share or even $100.50, they will technically bounce back up because that is their line of support. However, if they do penetrate past 100 and they hit like $99 or even $98 a share, their stock has the potential to just crash, free fall. I'm talking about reaching $77 or even $50 a share in a worst case scenario. So let's go ahead and paste that right here. $147 is their 200-day moving average. And when we think about their performance, because to me, I think performance matters. Yes, your wife's boyfriend also mentioned that as well. But anyways, when we think about their CAGR, the compound annual growth rate, meaning how much does Booz Allen's stock price grow in a single given year when we take into consideration their dividends and share appreciation in the stock market? Well, for the past 15 years, every single year, their CAGR has been on average 23.45%. That is absolutely wild. On average, your money invested into Booz Allen would have grown at a rate of 23% year over year for 15 years. Dude, that is absolutely juicy. So I think even if we don't look at their dividend profile, with what we have right now, Mr. Seahawk, hello, do you like it? I just got that in the mail. Dude, I love it. It adds a little bit of life into this room because there's no decoration. It is so plain Jane because for the longest time, I was a follower and a believer of minimalism, and I still am, but I feel like if I'm going to have my room be the studio, it ought to have a little more life. Hence, the Seahawks flag. But anyways, even if we weren't to look at their dividend profile, what we know so far, I think it's safe to conclude that Booz Allen Hamilton absolutely a dividend compounder with cheese. I'm telling you right now, this is a hidden gem that nobody is talking about. It is under the radars of almost every investor out here. By the way, this is my call to action. Join the Patreon, because the folks on Patreon were able to find out about Booz Allen Hamilton way ahead of time before I made this video. So by joining the Patreon, you get to find out about exclusive content like this before anyone else. And to be honest with you, I would be super appreciative if you did in fact join the Patreon. But anyways, as we jump over to do their dividend profile, as of right now, the dividend yield is 2%, which for me, the minimum standard to be a juicy dividend yield is 3%, unless we're talking about a BDC or a REIT. For a normal company, 3%. However, to have a decent dividend yield, then we're talking about 2%, and they hit the money on the mark, 2%, the absolute minimum standard to be a decent dividend payer. However, their performance I would argue dividend compounded with cheese. But more so than the dividend yield, we want to know, is it sustainable? So the payout ratio in relation to the earnings, and that's going to be a 32.86%, which means the dividend is absolutely sustainable, has a lot more room for growth. But more important than the dividend yield, as a dividend growth investor, I care more about the dividend growth rate. How much is the dividend payout growing year over year? And in the case of Booz Allen Hamilton, they're increasing it by 8.3% year over year. And at the bottom, I also included the free cash flow payout ratio because a dividend, in an accounting perspective, it's paid out by the EPS when we think about the dividends per share. However, dividends are funded by actual operating cash, by the cash that the company is generating. If the company is not generating cash, then they can't pay out that dividend. The earnings and the net income, all of that could be wonky, manipulative accounting work. However, what you cannot fake is the free cash flow. So in relation to their free cash flow per share, what is the payout ratio? Well, that's going to be 33.69%. So by all regards, whether we're looking at it from the GAAP perspective of the earnings payout ratio or the free cash flow payout ratio, their dividend payout is absolutely sustainable. I love what I see so far. Just by looking at the financials, the fundamentals, and the metrics, I think we have a pretty compelling argument. Their business model, that's what's up in the air. If you believe that it's going to crash and burn, run away. However, if you see opportunity like me, that's exactly why I'm also investing into the military stocks. I think right now might be a good time to buy shares of Booz Allen as they're going on this speculative sell-off. However, I think I'm getting ahead of myself. So with all of that said, I think we can move forward to figuring out the intrinsic valuation for this company. So based on my math and calculations, by the way, I always use conservative numbers because it's better to be safe than sorry. I never plug in aggressive numbers or rates or forecasted numbers. I always like to be on the safer side and be conservative. With that in mind, their DCF, their discounted cash flow analysis per share for me spit out $146. So Booz Allen, based on their free cash flow and the growth rate thereof, should be at about $146. They're nowhere near that. And when we think about their dividend profile, the DDM, the dividend discount model, well then I think Booz Allen should be about $180 a share. When we combine the two, then for me, I think the intrinsic valuation for Booz Allen should be $163. So by all metrics and all regards, I think Booz Allen is absolutely undervalued. And you might be like, dude, you are absolutely delusional. How can you say that Booz Allen is worth $163 a share? Well, let's go ahead and see what the Wall Street analysts believe Booz Allen should be valued at. Wall Street, on average, thinks that Booz Allen should be about $159 a share, which according to its current trading price would be an upside of 41% if they were to reach $159, their intrinsic value according to Wall Street. So Wall Street says 159, I said 163. That's what we think that Booz Allen should be valued at. It's not enough to just buy into a good company at any willy-nilly price. You also have to buy a good company at a good price, meaning with a good discount and a margin of safety baked in. So for me, I think a good price to buy into Booz Allen is $112 a share. So if you're keeping up with what's going on at $110, then it's a good price to buy into Booz Allen. However, if you're patient and you're willing to wait, then I think a bargain price to buy into Booz Allen with like a 35% margin of safety baked in or something like that, I think it's going to be $100. If you can snag up Booz Allen Hamilton shares for about $100 per share, I think that's a bargain. However, I can do you even better. A steal of a price to buy into Booz Allen will be $96 a share. Unfortunately, as I alluded to earlier, they do have a line of support at about the $100 to $101 price range, meaning we may never see Booz Allen hit 100 or even 99 or 98 bucks. But on the flip side, the market seems to be going on a sell-off and a rebound day over day, depending on the mood of Wall Street. So if that continues and that trend hits Booz Allen, they absolutely do have the potential to reach 100 or even 99, 97, 96 bucks a share. So what is my personal game plan? I'm not telling you to copy me, okay? Please do your own due diligence. This is not financial advice. If you think this is financial advice, you probably have very hairy and big pepperoni nipples. But my personal game plan, after doing all of my research and homework on this company, I like what I see. I think right now is a pretty good opportunity. Yes, I think the revenue model is going to be disrupted a little bit, but I don't think it's going to crumble and fall like Wall Street believes. I think they're going to lose probably like a contract here or there, potentially even like a decrease of 5 to 9% of their total revenue, but I feel like they should be able to rebound and adjust their business model to the current presidential administration. So with that said, I think I'm going to buy into Booz Allen, especially if it hits below $100 a share. Anything above, I'm going to wait it out. I'm patient because it's not something that I'm like dying to invest into like Google or Microsoft or even Chipotle. For Booz Allen, I definitely see that it's a dividend compounder with cheese, Parmesan, mozzarella, pepper jack. It's really cute, beautiful, but anything above 100, not going to be interested. When we get under 100, that's when I'm most likely going to be dollar cost averaging into this company. Anyways, I hope you guys enjoyed this content. If you did, please do me a solid, click like on this video, leave a comment, and if it's in your little heart, please hop on over to the Patreon, join the family. I would appreciate if you do. Anyways, love you guys, stay safe, good luck in the stock market. I'll talk to you next time.